Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin Show. My name is Merlin Rothfield. Of course, hope you had a great day out there. Not the most exciting. I did make a couple trades today, and wasn't the greatest day, but hey, there's still opportunity out there. Right now, I think that the main reason we saw the markets do what they did today, which looks like this, and I see a big streak of L's on there. I got Lisa and Liz and Lori and Les. All the L's are showing up there, and there's Steven. Good to see you guys. The day by itself, obviously a down day, which wasn't that great for the S&P, but just continuing really every day this week. We'll see what happens out there tomorrow and what the Jerome Powell speech is, which is why I titled the show All Eyes on Jackson Hole. Right now, I think the most important thing to do for tomorrow is just to pay attention to when he's out there speaking. We don't know which way it's going to go. I'm kind of leaning to the side, for those of you who have been following what's been going on with different FOMC members, I'm leaning more towards that they're going to hold rates in September again. Now, I know that would just create absolute firestorm on Capitol Hill, and I'm sure all the politicians, and I'm sure President Trump would just lose their minds. But I'm really starting to think that they're not going to cut, especially with that bad PPI number we just had. Now, of course, we do have another CPI, another PPI number coming out, as well as core PCE price index and unemployment numbers. But, as Steven says, that's why I'm short. Yeah, I think the markets have already priced in a 25 basis point cut, and I think that they're backpedaling now, realizing that's probably not going to happen. Remember, you already had Waller, FOMC members Waller and Bowman are both going, no, we should keep rates right where they're at. And you had Schmidt and Hammock, I believe, also said, we don't think that there should be rate cuts in September. So you're already seeing four members of the FOMC looking more on the side of let's keep it right where it's at for now until we get more data. Now, of course, we have a long window. I think we have 26 days before the next FOMC meeting. But we have started to see a pretty interesting shift. Let's bring up that Fed funds futures right now for you guys to see. If we go back just a week, 1 week ago, there was a 7% chance, called 8% chance we were going to keep rates right where they're at, and a 92% chance of a rate cut. That has changed now. It's a 73% chance of a rate cut and 26% that it's going to stay right where it's at. And I do believe that a lot of this is based off of the FOMC meeting minutes, seeing what the position of the other voting members are at the FOMC. And again, it's all about the data. And I've shown you this before. When we strip out most of the other countries here, I'll show you so you can mark your calendars for like the most important weeks here. Let's take out everything except the United States, and I'll fast forward over the next couple of weeks just to show you. Next week's not that big of a deal. You do have, next week actually is a pretty decent deal. You scroll down here and should be on Friday. Friday of next week, we get that core PCE price index number, which is the most important one because this will be the last core PCE price index number we get before that FOMC meeting, right? So this is very important. There are no expectations right now, but I'm just a little bit concerned with this trend because, as I pointed out the other day, in April we were at 0. May we're in 0.1, June we're in 0.2, July we're at 0.3. I don't know. I'm a big fan of the trend is your friend until the bend at the end, and that is starting to show an increase. If this ticks up to 0.4, the Fed will not lower rates. If it ticks up to 0.4 on August 29th, and that'll be an interesting point because if it happens next Friday that this number ticks higher, you'll probably see a pretty significant sell-off that day because I think the markets are basically going to realize, like, oh, shoot, that core PCE price index number, which the Fed says is the most important one, that's going higher. And it's above that 0.3. And I don't know what the Fed number is using, but if I put my cursor right here, I think you guys all agree that anything above 0.3 seems to be a little bit of an outlier. Not dramatic, but certainly most of the data falls, I would say 95% of the data falls underneath 0.3. So if we start to see stuff go above that, and I'll zoom out here even more, right? Obviously we had 2021 spikes and some in 2022, but for the most part, it makes me a little concerned that if we get that 0.4 number, that the Fed's going to go, no, we're going to hold it, and you'll see a pretty decent sell-off as it finally gets priced in, and we see this table over here shift to a higher probability of rates staying the same. So it could be what did it say? That would be the right time for the seasonal drop in September. Absolutely, right? The last day. If we go back here to that calendar, it's like the last day of August, last trading day of August. So yeah, not a good day to have that come out on, but that's the important one. Now, if we scroll to the next week after that, I did see a comment in here from where would that one go? From Andres, it says they need to see even more lower job revisions. Well, that's going to come the week after. We get the first week of the month is when you get your first unemployment number, and that's going to happen on Friday, September 5th. You can see here, there's the unemployment rate, and there is your chart of it. So it has been slowly increasing, but as I pointed out many times, this is not that big of a deal, right? We've been really between 4.0 and 4.3 for over a year now. So as long as it stays within that range, the Fed has more range to do what they would like to do. Powell is still on I would say Powell's neutral. Powell's kind of saying data dependent, and right now, I think if Powell had to vote right now, I think he would say hold. And the main reason is that PPI number. It's a total outlier. It doesn't fit any trend. If you're Trump, you're like, okay, I'm firing that guy who gave that PPI number because that screwed up everything, right? If that PPI number came out at 0.3 or 0.2 or 0.1, Powell probably would have said, okay, let's lower in September. But that 0.9 is so dramatically outlier. 5% doesn't bother me for unemployment. I don't think it bothers most people. I remember I mentioned this so many times. Ben Bernanke, back when we were having our super high unemployment, like the really colossally high unemployment back here, right? You guys might remember this. Back in 2010, when we were up over 10%, I remember vividly Ben Bernanke saying in multiple press conferences, we're looking for full employment. Okay, that's our mandate. Okay, well, what's full employment? And he said over and over, 5.5%, which would be right where my horizontal line is right now. I mean, we're nowhere close to 5.5%. We're so far below 5.5%. So I agree with you, Steve. I think that there's a lot more upside movement here for unemployment. The issue is you're going to have a political firestorm. Certainly, I won't mention any political names here, but there are many people who just a tick up by 0.1% in unemployment are like, it's a catastrophe. It's the end of the world. Look, to me, 5%, if we're stay below 5%, that's fine. So I think that the Fed has that perspective in mind also, that anything under 5%, we're okay. Even though the trend looks like it's slowly going up, right? If you zoom into the more recent data, this isn't that bad. It's really just been kind of flat lining here. So yeah, I don't think that the unemployment numbers are really that big of a deal. Although I read some articles, people like saying that the unemployment numbers are what's going to cause the Fed to make their decision. I don't agree with that. I think it's inflation. I think it's absolutely inflation and it's tariffs. So that presentation will be tomorrow. You can go, if you want, you can go to today's action. Actually, let me go a couple weeks further because this was the first week of September, which is going to be the unemployment rate. But then when you click out into the week after that, we have other big data, and that's going to be your PPI numbers and your CPI numbers. Remember, that PPI number was such an outlier. You can see it right there. That's giving the Fed pause. I assure you, that's got them kind of going, uh-oh. So when we get a second one, if it comes out at 0.9 again, I assure you they will not be lowering rates. My guess is this PPI number coming out for September will probably be down around 0.2 or 0.3, and that would be okay. I don't know why this number was such an outlier. It's just kind of crazy. Yeah, NVIDIA does report next week, Oliver. That's an important one to remember there. I'll tell you about my trades here in just a second. It makes me a little bit nervous. But anyway, that's your main economic data. Now let's go back and show you what's going to happen tomorrow, because I'm going to do this later on anyway. But Jerome Powell, as you can see here, will be speaking at 10 a.m. That's going to be Eastern time. So 7 a.m. for you Pacific Coasters. That's going to be 30 minutes into the trading day. If you're sitting there trading tomorrow and all hell breaks loose and you're going, what is going on? It's because Powell said something. So I would encourage you, if you are trading tomorrow morning, log in. I'm sure it will be broadcast live somewhere. Someone's streaming it somewhere. And just watch that one. Probably want to scale back on those trades just a little bit, just to be careful and protect yourself should he say anything that could cause extreme moves. My guess is he will still say that he's data dependent. He will let us all know what will happen. No, he won't. He's going to say things like, it's basically going to be like an FOMC press conference. We are watching closely these rates, and he's going to talk more about policy overall, not just maybe domestic, but it's going to be a wide-ranging presentation because the Jackson Hole Symposium is many economists and central bankers from around the world. So it's not just going to be U.S. stuff. So it'll be more of a global focus, but still could give us some clues as to what they're going to do. Obviously not as important as the actual rate announcement coming up in September. But anyway, that's all eyes. Yeah, and I like the graphic. I thought that was kind of a funny one. All these eyeballs just staring off in there. All right, let's go and talk about Walmart for a second. So Walmart came out with their earnings today, and their earnings were not great. They came out with 68 cents per share versus 74 was the expectation. Their revenue actually increased by $1 billion, or $1.3 billion, which is great. But what they cited in there, and that's why I read through it, because I wanted to see what they said about their business. They said that they absorbed some costs from tariff hikes and others they had to pass on to customers, but they felt that the customer was still being resilient. And I think maybe that's because more people are going to start buying from Walmart because it's just cheaper stuff. The second part, which is very interesting, is they say they see the impacts and rising prices at Walmart due to tariffs. And that's what caused them to get smacked today. You guys saw a pretty big drop in Walmart, or a big drop in Walmart compared to what most WMT. All right, here's Walmart. They were down 4.49% today. Not atrocious compared to what we've seen for some of the .com or some of the AI stocks, but still a pretty bad down day. Walmart is probably going to be one of those that weathers the storm regardless, and who knows, maybe they'll grease the palm of the president too and get some tax or tariff relief, but who knows. Either way, I was looking at Walmart today, thought maybe I might take a stab at it, but I passed on that one. I've got a little too much open here right now, and I'll show you those trades here in just a second. I'm a little bit heavy in tech right now, which I probably shouldn't be, but we'll see. Funny because they didn't even beat their revised earnings. They gave a very upbeat forecast, which I thought was interesting. They raised their forecast, but they also cited rising prices. Now, as a capitalist, I have to raise my eyebrow and question here, because Walmart can very easily raise their prices and right now attribute that to tariffs. But at what point does Walmart continue to raise their prices even after tariffs subside or those are locked in? It goes back to that press conference with the CEO. There was some famous handbag maker, and they asked the CEO, said, you're charging like $8,000 for your handbag. Why do you charge so much? And he goes, because people are willing to pay it. And if you look at something like Walmart, if they tick up on their items a couple cents every few months, most people won't even notice that. And to me, I think that's where they're going to start to make up for it on their balance sheet and their profit, is by just slowly adding to items and chalking it up to tariffs. It's the perfect excuse right now to raise your prices and call it a tariff. Walmart. Otherwise, you look at the chart of Walmart here long term, really hasn't been as great as some of the AI stocks for sure, but Walmart's not going to go away. This thing is just too big to fail. Thank you for bringing the tariff excuse. It is abused. It's abused, I think, especially by these retailers, because I can look at the chart of live cattle futures. By the way, has anybody here looked at the chart of live cattle futures? Like the cost of beef? You want to be shocked. I mean, this is just ridiculous. Here's live cattle. I'm going to go back to the lows here we saw in 2020. And I'm not even to the dead low here. Live cattle from bottom to its peak is up 207%. So I love steak. I love ribeyes. I love porterhouses. I like fillets. I like New York strips. I like steak. Bottom line is, you're paying a lot more money. I just got the new ad to the grocery store because I'm having a barbecue at my place this weekend, and man, expensive. I know it's not just ground beef, Lori. It's every beef product, and this is tied to a couple different things. Obviously, supply and demand pieces, but we get a lot of beef from Brazil, and we have a 50% tariff on Brazil. And so I think you're seeing less cattle being brought into the United States from Brazil, which drives the prices up. And of course, we are, even feeder cattle. Yeah, I don't have that future on here, but you typically go by live cattle futures. But bottom line is, it's all just surging, right? It's crazy. Now, this is beef, and of course, there's a bunch of other things, but the reason I brought that up is, again, I went to Habit for the first time in forever. I've really cut back on most of my junk food intake, but I was with some friends, and they go, let's go have a hamburger. I'm like, all right, that sounds good. So I went to Habit, and again, back in 2020, it was $8.30 for a number one combo meal at the Habit. $14.95 as of last weekend. And a large part of that, I can feel that pinch, right? And I think we all know what will happen here. At some point, live cattle will retrace and it'll drop back down, like prices normally do. The question I have is, once that happens, will we see Habit drop their, burger from $14.80 back down to 12, 11, 10? And the answer, of course, is a resounding absolutely not. right? They're going to keep their prices right where they're at because people are buying it. They're selling that product. And Walmart has so many products from so many different parts of the world. I don't know which pieces are getting hit by tariffs. Pretty interesting. So I think Walmart in a long-term play here is probably a pretty good play. Because if I'm on the board of directors at Walmart, I'm probably going to just make a statement to my board and say, look, we have a license right now to raise prices unilaterally across the board on every item in our store, and no one will question it and say that we're gouging. Everyone will look at it and go, oh, well, this damn tariffs. Tariffs are going up, man. Yeah, Walmart's getting hit hard, where maybe they weren't, right? Maybe they aren't getting hit on certain items. But I'd go to my board and I'd say, look, every month I want you to raise the price of every item by a nickel. May not seem like much. Every month, a nickel. By the end of the year, I've only raised prices 75 cents per item, right? If you're paying that much by local, yeah. And most customers aren't going to see that and won't notice it. But the quantity and volume that they do globally, they will see it on their bottom line, and these earnings numbers will get a lot better. So anyway, I think that's a pretty interesting thing for Walmart. Their earnings weren't that great. Revenue was okay, and they raised their forecast. So they can just blame exactly, Stephen. It's the perfect time for any business in America to raise their prices and get away with it. Any other time, we'd be like, oh, they're gouging. Nope. I mean, I don't run a business that sells a product or a service, but if I did, I'd raise my prices. I would raise my prices and be like, oh, tariffs. Sorry, guys. I don't know what happened. Sorry, I was talking too quick there. Yeah, for some reason I was thinking 50 plus 25 is 75. Yeah, you're right, Liz. Liz got me. Yeah, 60 cents extra per item by the end of the year. Thank you for the fact check. It's funny, as I said it, I knew I was wrong, but I'm like, I'm just going to go with it. 50 and 2 times 5 is 10 is 60. Okay. Can we raise our rates for consulting fees? Why shouldn't you? I mean, look, why shouldn't you, Tofi? You raise your prices until your customers don't pay anymore. And, John O'Donnell did something this is years ago. I'm going to have to write numbers down so I don't get Liz catching me on my number problems again. But if I have 100 customers and I'm charging $10, right, per item, that's $1,000 right there. But let's say I raise my prices to $20. I've literally doubled my price, right? And my customer count drops from 100 to 75. You may think, oh, they're losing a lot of customers. He's lost 25% of his customer base, right? Because in the first example, I had 100 customers and I'm charging $10. That's $1,000 total. But if I doubled my prices, I would lose 25% of my business. Okay, is that good or bad? Well, in this scenario, it's fantastic because not only am I servicing less customers, but I'm making $1,500 in that example because I have $75 or 75 customers making $20 per customer. So I think it's this walking this fine line of how do I raise my prices enough, and I'm okay to lose customers. Lose them. I'd rather service 75 people than 100. And so, now all of a sudden, let's say I raise my price to $40. $40, and now I lose more customers. I'm down to 50 customers. And those 50 customers still buy my product at $40. Is that good or bad? In this math example, it's great. I'm doubling the profit from when I had 100 customers. I have half the customers now, and I'm making twice as much money. So simple math equation there. Rob says, you still got 75 left over to pull you up to the top of work. Yeah, it's simple business, and I think that's what's going to happen. I think a lot more customers or businesses are going to raise their prices and continue to do so until they find out that their bottom line numbers have changed. But Walmart is in a great position here. All right, I'm going too long. I'm rambling. Let's get to some charts. Let's talk about Marcus. He says, thoughts on the upcoming Apple event. Will it boost share price? Sure. When Apple does these events, it gets all the publicity, right? It's center stage. It's every news outlet is there. They're really making a big deal about it. The question is, when do you buy? Are you going to buy right before that event? We are in a situation right now when Apple said they're going to give another $100 billion to infrastructure in the United States, of course, bending the knee to President Trump. That caused this huge spike. I would kind of wait for a little bit of a retracement. If I'm not mistaken, I believe that event for Apple is on the 9th of September. I'll put a vertical line right there. So you have until that vertical line before they do the event. And I would kind of expect this market to sell off a little bit more. It does feel like we're drifting lower. I think that there's several arguments for the rates to not get cut in September, and we're going to get some very important data at the end of next week and the first week of September. So, I'd wait. I'd wait on this one, Marcus, but I do think it'll have a pop in price because they're going to unveil some new things and show some new technology. Honestly, the last time they did, it felt like people were booing them because they really didn't do much. They didn't really increase much. And from what I'm seeing now, it's, the iPhone 17 is getting 0.2 millimeters bigger and it's lighter. Yeah, like Oliver says, no new innovation will hurt Apple. Right, and so they have to do something here. Of course, we all know it's going to revolve around AI. They're going to talk a lot about AI and how AI is doing this and that and the other thing. But is there something truly groundbreaking that Apple has come up with at that September 9th? We'll see. I don't believe it will be that great, but I do think that just because they do the event, there's always that positive pop from the population. So that was one question. What else did I have? Scott says, was looking at swing trade on corn, just hit demand. Would you take this trade? I don't trade corn, so I very rarely trade commodities. I do gold and silver and things like that, but I'm not a huge fan of trading commodities. But here is your corn futures chart. And okay, I see what you're looking at. So you're talking about basically coming back in these lows from back in August of 2024. Yeah, I don't know, man. Scott, I really couldn't tell you there. I couldn't tell you what to do here because I don't follow the seasonality of corn. If you want, in my opinion, my go-to expert on commodities like this is Don Dawson. If you go to barchart.com, you can bring up Don, and typically he does all kinds of great articles. Yeah, markets are worse, Don. Let's go to bar chart, see if I can bring him up. And I think I can. Oh, let's see. There's my old page, which I haven't used in years. Where are the other authors? Let me see. Oh boy, I don't know where I find all the author stuff. Let's go to learn. Oh my God, it's been so long since I wrote for these guys. I really should write some more articles for them, but all right, let's go to bar chart home. Because you scroll here, you see more, and then there you go, featured author. Here's Don Dawson on the left-hand side. If you want, I can copy that link over. Don is great with commodities. He does tons of stuff, and it looks like he's still being fairly active. He looks like he's writing one article a week. So let me go Control F and find something on corn, because he probably wrote an article on. Nope, now there's 3 of them on here. So there's your first one. Global corn demand soars. U.S. supply in focus. Can you capitalize on this market shift? So demand soars. That was from July 7th, but look at the price. That was July 7th. That's back here where my cursor is. Well, if demand is soaring, then why is price falling so much? Right? Pretty big sell-off from that point. I would be inclined to think that corn is going to have a bounce here just because it's down almost 27%, and the supply and demand would cause that to move back up, and it's at relatively historic low levels. So from that perspective, Scott, sure, but I don't know enough about corn. This is not my area of expertise. Steven says grains are looking real good this year. Yeah, if you look at wheat also has been just getting crushed, like just lower. Beautiful trend there. This looks like one of the stocks that Michael would ask me about, right? Look at that chart, just going dot, 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 dot. Right, and Margaret says it could be because high fructose corn syrup could be banned in certain products. And Coke's saying they're going to switch over to real sugar, which, brings up SB. Does that mean we should now go long sugar and short corn? Possibly. Again, outside of my area of expertise. I wish I was more active in that space, but there's just too many things for me to follow and watch. So yeah, I don't really trade those ones. Again, the stuff that I like to look at is just to see what the costs of my goods are, and man, that live cattle one is brutal. Stop drinking coffee. Ever since I broke up with my girl, I stopped drinking coffee. She was a big coffee drinker, and I don't drink it anymore. So here we go. OJ was exciting for a long time and then just kind of crashed back down. Interesting. Over a 50% drop in orange juice. And then my personal favorite, cocoa futures, just because I like chocolate. I like it a lot. But nothing really telling there from that price chart. So sorry, Scott. I don't know if I helped you there. All right, this one's totally from left field, and then I'm going to go into show you some of my trades here, but I wanted to get to this just because it was sent in to me. John T. says, was in your early crypto class for over a year. Thanks to you, I built a respectable position in crypto. Good. Glad to see that, John. I'm now trying to consolidate these holdings onto my Trezor. They're currently on MetaMask. and in Kraken as well as Trezor. My MetaMask account requires a Trezor public address, which I cannot find in my Trezor information. Same thing with the Kraken. Okay, so unfortunately on this show, I'm not sharing my ledger with the audience. That is just, it's too much of a public-facing thing to show my ledger balances and things like that, but inside the classroom I will. When you're using Trezor or a ledger, you just have to click on the receive address. So let's say you have some Bitcoin on MetaMask, or you got Bitcoin on Kraken, whatever it is on those exchanges. Let's say it's Bitcoin. When you send from Kraken, it's going to say, hey, where do you want to send it to? And you have to give it an address. So what you need to do is log into your Trezor, turn it on, and you'll see either a receive button or click on your Bitcoin wallet that's in your Trezor. And if it's not, create a Bitcoin wallet. You go down to applications, you add in a Bitcoin wallet, and then you say, what's the address of that wallet? You copy that address and you put it into the form on Kraken or your MetaMask where it says, where do you want to send it to? Now, just to make sure you didn't screw this one up, I highly recommend that when you send your crypto from Kraken to your ledger or your Trezor, send a small amount just to make sure you didn't mess it up. And once it shows up in your Trezor wallet, then you can send the rest, but just send a small amount. Unfortunately, I can't show you how to send it to my ledger because, again, I'm not sharing my crypto account balances. This is way too public of a venue for me to do that. So there you go, John. Hopefully I answered your question there. Okay, let's go into trades. So as you guys know, yesterday I picked up 500 Palantir. I picked up 500 NVIDIA. Really just perfect timing based off of demand zones. I had alerts set and just ended being absolutely fantastic. So these are the current long positions I have. And I adjusted the Palantir and NVIDIA because I sold calls against those today. I did at-the-money calls on those ones. Just so we can check it out here. So let me bring up the chart here on PLTR. I just feel like we're going to drift a little bit lower here. So I did at-the-money calls expiring not this Friday. I chose next Friday. I took a little bit of a risk there. But let's show you the strike prices here. Here's the strike price. So the Palantir was the 157. Let me type that in here, just make sure it looks good on the screen. 157.50. That was a $5 premium I collected. That's not bad. That's over 3% for a week premium for that one. And you can see it's right above where we were today. So when I made the trade, it was at the money. Now it's sold off just a little bit, but we'll see here. That has lowered my cost basis on this one from... Well, it's lowered by $5. So now I'm at 138. So I'm pretty sure when you look at this Palantir chart, I'm pretty sure that I'm not going to take a loss on this one. We shall see, right? Yeah, like you said, Rob, I thought there'd be some follow through. I really thought we'd see some momentum move to the upside here. And it did. We got a little bit of a gap up, but then just kind of drifted a little bit lower. Not an intense day by any means, but down a little bit in the after hour session as well. So that's what I did for the Palantir. If we go over here to the NVIDIA, which... This is the only one I'm nervous about. I'm a little nervous about NVIDIA because the way the chart formed today. Again, I only have 300 of the NVIDIA, but here are the calls I sold against it. I sold the 177s. Let me take my alert off there and go 177, 177.50. Those expire next Friday, and those collected 555. So what does that look like? No. Yeah, actually, Luis, it's not just the... I mean, sometimes I look at implied volatility for sure. In this case, I feel like I was gifted, right? I feel like I was absolutely gifted a huge winning trade from where I purchased those yesterday. So I'm a little bit nervous, as the conversation may have alluded to. Margaret, I'm bullish on NVIDIA too. I know they report next week. If they have a great earnings and my shares get taken away, I don't care. I had a great trade. I mean, my average price based off this now is 164. We're at 174. I've got 300 shares, so roughly 3,000. If it makes it up to 177.50, that'd be another $3. So, that's going to be about a $4,000 gain in 2 days. I'm okay with that. I didn't look what the implied volatility was on NVIDIA, but I'm pretty sure it was really high yesterday because of this big move. So, I'm okay making a $4,000 a day trade in 2 days. If it gets taken away, it gets taken away, even though I'm bullish. So, I don't like the way we have a longer tail today on the top. That's kind of a bearish sign, which is why I did it more at the money. And to Margaret's point, if I felt bullish on the market overall, I probably would have sold a much higher strike price. I probably would have gone the 180s, maybe 185, somewhere where I know I'm most likely not going to get taken away. But I think that part of selling those calls, especially for next week, the premium was pretty high. Although the premium was better for Palantir from a percentage perspective because implied volatility is higher on Palantir, obviously. But yeah, I'm fine if they get taken away. I'm not too worried about that. We'll see how it goes. If all of a sudden by Wednesday we get to 177.50, I may close them out and maybe sell a higher strike price. But I'm okay with it as it is. Again, I don't want to look a gift horse in the mouth. I've already made all the profit off this long tail, fortunately, and we'll see what the end of it equates to. As far as Palantir, Palantir's earnings were back in August, so I got a ways to go there. Not too concerned about the earnings being an issue for me, but right now my average price, now that I click that premium, is actually below the low of that demand zone. So I'm in a perfect spot. So that was the only two additions I made there. Margaret says, any thoughts on ETH holding up well and Bitcoin seems to be in a downtrend? Yeah, I think what you're getting right now is just a rotation out of Bitcoin into altcoins. That's typically what happens. You see the dominance trying to shift a little bit here, and let's go. There's Bitcoin. So Bitcoin is at a very precarious point. We talked about this yesterday. It was nice seeing it bounce up, but today the way we sold off did not look really good. That low point of this zone would be the lowest point we've seen since early July. That's not good. That's below 111,919. Right? That's the bad point, and we're $500 off that right now. So hopefully we'll stabilize here and start to build a base and move to the upside. But it's not looking good. That sell off from 124,000 down to 112. That's $12,000. That's a 10% swing in just a little over a week. That's pretty significant. So nothing. I'm not panicking, but after that, you've got a long way to go. I think it's all the way down to 108, which would be a decline of almost $4,000 per Bitcoin again. I think what you're going to get is a lot of liquidations because a lot of people are buying right around this 112 level, expecting this to hold. There's manipulation out there that can happen, and they could force these things. They're called flash loans, so you can get a flash loan which gives you incredible leverage. Like we're talking 500, 600, 700 to 1 leverage. But it's used for very, very short-term trades, like literally within one block. So it's like with Bitcoin, that'd be within 10 minutes. With Ethereum, it'd be within 13 seconds that this loan has to be paid back. But they can use that to create an impression that would push it down below that demand zone and therefore trigger liquidations. And that's what happens quite a bit in crypto. So it's something to be concerned about. But again, I'm a long-term holder on this one. I'm not that concerned about it right now. But it doesn't look good. It looks like we could be going lower for Bitcoin. All right, let's see. What else do we got? Let's go into our earnings calendar for mañana, at least talk about what we're going to get into. So obviously you have the Jackson Hole Symposium. Tomorrow, I would encourage you to watch this if you can. Follow it. Be careful if you're trading the open. That opening hour is going to be very volatile. It'll probably be rather quiet until Jerome Powell speaks, even though it's the opening rush. You're talking 30 minutes in the trading day, Jerome Powell takes that stage. And I don't expect to hear anything like we're going to cut rates or we're going to lower rates. He's just going to talk about the economy and how rates are determined, and probably not going to be that impactful, but you just never know what comes out of his mouth. So very important one to watch out for. And you don't really have anything on the earnings front. I think when I looked at the earnings calendar, do I have it up here? Yeah, there was nothing on the earnings calendar. Looks so beautiful. Yeah, Jackson Hole is pretty cool. I've driven through Jackson Hole, Wyoming, many years ago. I was much younger. It's a very rustic kind of cowboy country town. It's pretty cool. I don't know how or why they chose that location. It seems kind of odd to me, but that's what they decided to do it at. All right, you guys got any last minute questions? Anything you want me to jump into real quick before I wrap up here? Man, a 33-minute show. Wow, what's going on over here? I must be getting depressed and going back into my depression on romance. He's going to say some very good things about Trump. I'm pretty sure that's not going to happen. He's going to stay away from that one. That's for darn sure. We want some more. Well, you got to give me some questions here, otherwise I'm going to wrap up and go enjoy some sunshine. What would be a good place to add to ETH? It's a great question. ETH is a difficult one because of the move it's had recently, right? It kind of skews things, but after a big run like we had, it's hard to pinpoint what's a good spot. Obviously, for me, when you look at supply and demand zones, the one that jumps out on my screen here is right around 3,700. But that's $500 lower than where we're currently at. Are we going to get there? I really doubt that. I don't think we're going to get down to 3,700, although you just never know, right? Bitcoin is looking fairly weak. I think if Bitcoin sells off, that is going to cause some of these altcoins to rally, and there's a lot of altcoins out there. Basically, everything other than Bitcoin is an altcoin. But yeah, 3,700 would probably be my number one spot there. Rocket Labs. Let me go to stocks here. Okay, so interesting chart there, George. From a technical perspective, I have to say I like it. And it's very after the fact. And the main reason is, if you look here on Rocket Labs, you have this sideways consolidation that rallied, it went sideways for a few days, right? And even before it bounced out of there, that would have been my target. And for those that know supply and demand and how it works and how we draw the zones and structure and all that, that would have been my buy point, right, on this one. Because you're in a really nice uptrend, you're looking to buy back on a pullback in there. And that pullback zone would have started actually right there, 39.17. And you notice that yesterday we came back into it and we had a hammer formation. So this is a very nice thing when you have a hammer formation, a tail end of demand zone. That was my alert for my trades on Palantir and on Nvidia, and it looks like Rocket Labs has a very similar picture. Obviously, I'm not a fan that for the past 3 weeks to a month, it's just a nothing but sell off, but now it pulled back into a demand zone. It has a hammer formation. So it would lead me to believe that we are starting to see a little bit of a rally here. The big question is, can we break this trend? So let's add on a simple moving average here. I'll throw in something like a 20 so you guys can see how the 20 shapes here. It's going to be below, the recent data will be below that 20 period moving average. You know, so now all of a sudden you have this, the price action is down below that 20 period moving average. I would really be looking at this as, you know, that's your overhead supply. So yeah, I think you're probably set for a rally in Rocket Lab, but I'd be eyeballing that 20 period moving average as my target. Not that this is going to continue and have a huge uptrend and keep moving up, but target that first level is going to be targeting the moving average. Your second target is going to be this most recent pivot high, which is, well, this is a tricky one. I like to use the body, so I'd say about 45.10. Once you get above that, then I think you could start to see more upside movement here. But it's got a lot of challenges in front of it, like that one. That was good. Yeah, and honestly, what Rob said right there is probably the real thing, which is if it does get up to the moving average, you have a higher probability of shorting it and being on the right side of the trade because it has been trending down. So you got the downtrend, you got the moving average pulling down. Yeah, you might want to think about shorting. Because you're from OT. Will SPY be up tomorrow after 5 days losing? I don't know. I'm no oracle. I have no idea. Let's go SPX. I mean, honestly, I don't think so. I don't think that the S&P is gonna be up tomorrow. It really all depends on Jerome Powell. I think he's the one that's going to create the movement there one way or the other, but I just don't feel it. If you look at our moving, you're down below a 20-period moving average. We had a hammer formation yesterday, which had no follow-through, meaning no positive momentum here to the upside. Today's a red candle. It just feels like we're going to slowly drift lower. So, yeah, I don't think you're going to see an update tomorrow. But, what do I know? Markets do what at least people expect it to do. That's what my mentor used to tell me. What the fewest people think it's going to do, that's what it's going to do. So. Did Rocket Lab raise any cash? I don't know. I don't follow it. I don't follow Rocket Lab. All right. Cool. I think I got most of your questions answered. So bullish. Unless we have final options. With the Bitcoin halving coming up. What are you talking about? How much do you think will impact? The Bitcoin halving isn't happening until 2028. You got 3 years to go till that happens. I'm not worried about that at all. Yeah. 2028 is the halving there, Sol. So, yeah, that's not even a consideration at this point. And typically the halving wasn't going to be a direct correlation on Ethereum. It's a direct correlation to Bitcoin. Supply is going to drop from 450 Bitcoin per day to 225. So supply is going to start dropping in half, and that should boost the price of Bitcoin up, particularly if demand is accelerating in 2028. Les wants to know about Mr. Softy. Looks pretty bad, doesn't it? There's really not a lot of good arguments here from a trend perspective. It's broken it's making new swing lows. It's actually below this area of demand, so you could use this little hammer formation here where it dropped and it rallied out. You're sitting right in it right now. I'd contend that if you get below 500, you're probably going to see a very quick drop to 490. It just feels like that's the way things are trending. It's for the first time in forever. It's the first time since April you actually have the moving average slowly curling over and pointing down. So it doesn't look very good here for Microsoft either. And remember, this is such a big component of the S&P and the NASDAQ that this one here is going to have a pretty profound impact on the way these markets are moving. So yeah, I'm not a fan of what's going on. Naum says, I see Bitcoin 123,000 by Tuesday. I'd love to know the justification. Yeah, I agree with you, Steven. I like Microsoft, but the chart right now, it's telling us different, right? And to me, that's the big key, is the trend is your friend until the bend at the end. And this, right now, I would argue, if dropping below 500 would be the bend at the end. Now, does that mean that the trend is completely over? Probably not. It's just, I think the acceleration of that trend is going to start to slow down. And that is problematic for our markets going forward. Obviously, we want Microsoft to lead the charge here, or NVIDIA, but they're both looking a little bit weaker at the moment, and that could bring us down. So yeah, keep your eye on Microsoft. I think if it gets below 500, you could start to see things trigger and be pretty bad. Put a 50-period moving average. I'll just change that one, sure. And here's a 50 for you. And we're now officially, because the market's closed, you're below the 50-period moving average for the first time since late April of 2025. Not looking so good. So yeah, I don't know if it's bent yet, but it's bending. Breaking below 500 would be the bend at the end there for Microsoft, and that would not be good. All right, that's going to do it for me. I'm going to run. So thank you for the questions. I had a few people that gave me some questions. So John T, Scott, Marcus, thank you guys for the questions. I appreciate that. Tomorrow, Jackson Hole Symposium. We will do a Friday weekend show. I'm looking forward to have a nice glass of whiskey with y'all. I hope you guys have a great trading day tomorrow. Be careful that opening hour because of Powell and Jackson Hole and all the speculation going on about rates. But other than that, you don't have a lot of economic calendar data to really worry about. So there we go. So thank you guys so much. If you have anything you want me to discuss on tomorrow's show, email me at TraderMerlin@gmail.com or put it down below the YouTube channel or any comment there. I will see those on the page and edit them and bring them onto the show. Thanks, guys. Have a great Friday. I'll see you tomorrow.